Singapore Fintech Strategy. What if I told you that one of the most advanced financial systems in the world is not in the US, not in Europe, but in a small island in Southeast Asia? Singapore, a country with less than 6 million people, has become one of the most powerful fintech hubs on the planet. Global banks operate there, startups scale there, governments study it, and unlike many other countries, Singapore didn't just adapt to fintech. It designed its entire financial system around it. So the real question is not whether Singapore is successful. The question is, how did it become one of the smartest financial ecosystems in the world, and why is everyone trying to copy it? Because once you understand Singapore, you start to see what the future of finance actually looks like. A country built for strategy, not size. Singapore does not have natural resources. No oil, no massive internal market, no large population, so from the beginning, it had to rely on something else: strategy and execution. Over the past decades, Singapore positioned itself as one of the most important financial centers in the world, competing directly with cities like London and New York. But what makes Singapore different is how early it understood that finance was going digital. Instead of reacting to fintech disruption, Singapore decided to lead it. And that decision changed everything. Regulation that enables innovation. In many countries, fintech companies face a constant struggle with regulators. In Singapore, the relationship works differently. At the center of this system is the Monetary Authority of Singapore, MAS, both the central bank and the financial regulator. MAS is not just a watchdog. It acts as a builder of the ecosystem. Instead of blocking innovation, MAS actively works with fintech companies, banks, and investors to test new ideas. One of its most important tools has been the regulatory sandbox, allowing startups to launch and test products under controlled conditions. This reduces risk, but more importantly, it reduces uncertainty. And in finance, uncertainty is often the biggest barrier to growth. Because of this approach, Singapore has become a place where fintech companies can move fast without breaking the system. Digital infrastructure at national scale. What truly separates Singapore from most countries is not just regulation. It's infrastructure. The government has invested heavily in building digital systems that connect the entire economy. One of the most important examples is PayNow, a real-time payment system that allows individuals and businesses to send money instantly using just a phone number or national ID. No bank details, no delays. Another key system is SingPass, the national digital identity platform. With a single login, users can access government services, sign documents, and verify identity across financial platforms. This level of integration creates something extremely powerful. It reduces friction, and when you reduce friction in finance, adoption increases dramatically. For fintech companies, this means they don't need to build everything from scratch. They can plug into an existing digital ecosystem and scale faster. A magnet for global financial players. Singapore is not just a local success story, it is a global magnet. More than 200 banks operate in the country, along with thousands of financial institutions, asset managers, and fintech startups. Major global companies use Singapore as their headquarters for Asia-Pacific operations. Why? Because Singapore offers something very rare: political stability, strong legal systems, transparent regulation, access to Asian markets. This combination makes it one of the safest and most efficient places in the world to operate a financial business. And just like in the UAE, this creates a powerful network effect. Talent attracts companies. Companies attract capital. Capital attracts more talent. And the system keeps growing. Where fintech meets the future. Singapore is also at the forefront of financial innovation. The country has been actively exploring areas like central bank digital currencies, CBDCs, tokenized assets, cross-border payment systems, AI in financial services. Projects like Project Ubin and Project Guardian have explored how blockchain can be used for interbank payments and asset tokenization. These are not theoretical experiments. They involve real banks, real institutions, and real capital. This is where Singapore stands out again. It doesn't just talk about the future of finance. It builds it. A system designed to scale. What makes Singapore truly unique is how everything connects. Regulation supports innovation, infrastructure enables scale, capital fuels growth, and all of it is aligned under a long-term national strategy. That's why so many countries study Singapore, because it shows that fintech success is not about one company or one technology. It's about building an entire system that works together. What comes next? Singapore represents one model of fintech success: highly structured, deeply integrated, and globally connected. But not every country follows the same path. For more countries, subscribe now and join the journey. Because in the next video, we move to a completely different environment. A country with more than 200 million people. A system driven not just by infrastructure, but by necessity. And one of the fastest growing fintech markets in the world. Brazil and its explosive fintech boom.